how to place a bear call spread on the Trader Workstation Mosaic version here. So we're going to focus down the bottom left hand side here. You can see our options window, and in the little corner here you can see strategy builder. So we'll click on strategy builder and you're going to see the strategy builder open out as a separate window out here. So let's imagine we wanted to do a bear call spread on SPY for the May the 6th expiry, and we were going to do the 208-209 bear call spread. So the first part of the trade is we're selling the 208 call option. So the calls are on the left hand side, and we can see that if we want to sell a leg, you click on the bid price, and there's a little note as you hover over it saying sell the leg. So if we click on that, you'll notice that that leg is after transporting up here into the strategy builder, and you can see it's leg number 1. It's telling you it's a short call. Then we need to add the second leg in here, and the second part of the trade is we need to buy the 209 call. So we click on the ask price, and again, just as a prompt, it's telling you there that you're buying this leg. So we click on that, and that transports up into the strategy builder. Now first of all, it's telling you here it's a bear call spread, so it's giving you a hint you've done the right thing. So what have we got here? We've got two legs in the trade. The first leg is to sell the May the 6th $208 call. It's telling us what the delta is at the moment. It'll tell you your overall delta position here. And it's giving us a bid and an ask price here for that leg of the trade. The second part of the trade is we're buying the 209 call. Again, we have a bid and an ask. And then what the system does for you underneath there, it calculates the overall bid and ask price for you. So for example, if you're selling the 208 call, you're going to get in 108. If then you're going to use some of that money to buy the 209 call, you're going to spend 80. So the net differential is 28 cents. That's how you get to 28 cents here. And then it's the same on the flip side. So what we like to do is always haggle with the market somewhere in the middle. So the bid and the ask here is somewhere between 32 and 28. We're going to look for 30 to see if we get filled. If we don't get filled, we'll just amend our price. So let's go ahead and do that. So we come to our order entry window here. We can see we always choose limit. When you're doing these spreads, always choose limit. And the other piece of advice is don't place opening orders in the options market until at least a half an hour to an hour of trading has gone by. We'd really recommend you place the orders during the trading day. We'll leave the quantity at 1. And we're going to change our limit price down to 30 because we can see the bid and the ask has changed here. So we'll change it down to 30. We'll change that to leave it as a day order. We always say leave your option trade orders for day orders. And the reason for that is if this trade doesn't get filled today, you don't want it carrying into tomorrow, just in case the market moves against you and you don't get filled at a good price. So if we're happy with all of that, we click on submit the order. And you can see here, this is a really cool feature of the Trader Workstation. You get your probability calculator up here on the left hand side. And we can see here that we have a 72% chance of winning on this trade. And then if we come down here, it will tell us what will we be getting for a 10% move in the share price. So if the share price moves 10% downwards, you can see we're going to make a profit. But if it moves 5% upwards, we're going to lose money in the trade. So it's a little profit and loss table. We would recommend you go in and do your own profit and loss table. So we're happy with that. We get into the order confirmation window here. And this is just like your last chance saloon. Do you actually want to go ahead and place this trade? Are you sure you want to sell the 208 call? Are you sure you want to buy the 209 call? For a credit of 30 cents. That's important that you see credit there. This is a credit spread. The amount you're getting in is $30 because we're only doing one contract. And they reckon your trading commission will be somewhere between 143 and 317. So if you're happy with all of this, we click on transmit. Just before we do that, you can see the margin impact on your account for placing this trade. It's going to change by about $28. So that's how much margin you need to set aside for this particular trade. We click on transmit. So that order has now gone into the market. We'll see our orders here in the bottom left hand corner. So we'll just open that up. We can see our SPY. I'll just maximize that a bit for you. You can see it here. We're not getting filled here at the moment, so I'm just going to haggle with the market really quickly to try and get you filled. So you can see we got filled here 29 cents, and you can see it down here as well. We also got filled. So let's go and check our positions now. If we open up our portfolio window, you're going to see there we have our SPY bear call spread down at the bottom there at the moment. So that's it. In a nutshell, that's what it looks like. It'll show up as -1 and it will show up as a bull call spread with -1. So -1 beside a bull call spread is actually a bear call spread. It's an unusual feature with interactive brokers. It's something we don't agree with, but they're not going to change it now. So when you see under your position -1 beside it, it's the reverse of it. So it's actually the bear call spread. And then if you click on the plus arrow here, you can see that the differences between the two trades. You can see that you have a 209 you're one contract of, and you're negative on a 208 call.